All right, folks, Friday we had the jobs number, and as you know, I sent out my estimate, my forecast yesterday. My forecast was for 199K. Now, of course, it did not come close to the 263,000 non-farm payrolls, but my number was forecast stronger than the consensus. The consensus was for 185. I had it coming in above that, so I was in the right direction once again. I have to say there's still a lot of negativity and pessimism out there when you look at the coverage of this number. Most of the stuff that I have been reading was like, yeah, it was good on the surface, but when you dig down below, you know, there was a problem here with the earnings. The average hourly work week went down by 1/10 or something like that. So there's still, I mean, there is a load of negativity. There is a load of pessimism. They're trying to pick apart everything and look at the negative. They're trying to look at the dark side as opposed to taking it for what it is. That is a very strong number. We have had a very strong string of numbers. The unemployment rate dropped to 3.6%. That is a 50-year low, folks, a 50-year low. But yet, in the media, and many analysts on Wall Street, economists, they are skeptics. They are looking at this. They're picking it apart. They're saying, yeah, well, it's not that great. Come on! It is absolutely fantastic. And this is another reason why I am telling you stock market's going to go higher. It's really, we are not seeing a very high level of bullish sentiment right now. It is nowhere near extreme. In the latest reading of the AAII weekly survey, that's the American Association of Individual Investors, they put out a weekly survey. Bullish sentiment was about where the historical average has been, nothing elevated. Bearish sentiment was low, I can tell you that, but neutral sentiment is still sky high. There's a lot of people still sitting on the fence that haven't decided, and I'm telling you, they're going to jump in when the market is higher. The market's going to go higher, S&P is going to go over 3,000, and then you're going to see all these neutral people jump off the fence and become buyers, and that will probably set up some kind of a decent correction. One thing I have to mention is that fiscal flows, oh man, they are just accelerating like crazy, and that is the tide that floats all boats. When you have levels of government spending like we are seeing right now, which is unprecedented, that's just lifting everything up. And of course, bank credit, as I've been saying for months and months, the trend there is very positive. We saw a little slowdown recently, but it's picking up again because reserve balances were drained way down, way down. The last reading right now, reserves in Federal Reserve banks down to the lowest level in 7 years, well, almost 7 years, October 2012. So all that draining of reserves, what do you think? The banks, those are tier 1 assets. The banks replace those lost tier 1 assets with treasuries, which are also tier 1 assets. That is why, despite the strong economic readings that we have been seeing, you're seeing a bid in treasuries, and this is a technical phenomenon. It's what I've been talking about, and it's what only I cover, and I spoke about this in my last video about these reserve flows. You could trade off of this. These are things that happen weekly, monthly. You could absolutely trade off of this. My people, they get this information from me. It's not out there. You cannot find it out there. There is not a service, including the MMT people. There's no other MMT person out there who does what I do when it comes to these reserve flows. One interesting thing I have to mention is the dollar, which I thought would rally on the strong jobs print. Dollar's getting sold off today. Remember, I have been talking about this. The 61.8% retracement, that's a Fibonacci retracement. I know a lot of people follow that. That 61.8% retracement in the dollar index from the high in January 2017 to the low. The high was 103.82, I believe. The low was 88.25. The 61.8% retracement was 97.87. We blew through there marginally blowout stops. That's what happens. People place their stops just above or below these important levels. That's stupid. That's so easy for me. I remember my days as a floor trader. We used to know exactly where the stops were placed. We would juice the market up. We get a position on first. We juice the market up, buying or selling one lots. We hit the stops. All the stops get elected. We buy and we liquidate into that whatever's happening. It was like a cash machine. So I know how to play this. So it went up. Tried to get up there again yesterday and this morning. And today on that strong number, interestingly enough, the dollar is getting sold off. Now we'll have to see if there's follow through next week. But a weekly close now on the lows, I think would be, at least for those technically guided funds or whatever, that could be a negative development. So we have to pay attention to that. Gold having a rally here today. That's another thing. On a strong economic report, you would think gold sells off, but it has a rally, I guess, supported by the weaker dollar or in tandem with the weaker dollar. Oil bouncing back as well. I think I said yesterday that we are coming into a period now, seasonally, where you see drawdowns in crude inventory. So April 26th, the week ending April 26th, that was last Friday, that's like the inflection point. We are now moving into this seasonal period where we should see drawdowns. Anyway, all this stuff, as usual, covered in my report, MMT Trader. Zombie trading. We front run the zombies, take their money, and get out before they die. Please go to my website, pitbulleconomics.com. Sign up. Over the weekend, you can check out all the back issues. The new issues of MMT Trader come out on Monday. Zombie Trading, the new issue for next week, will come out later today. Everybody, have a great weekend. See you next week. Bye-bye.